as well. Ladies and gentlemen of the interwebs, we are here live with the Beacon TVL show. Got a full panel today, ladies and gentlemen. Wanted to start off by introducing myself. My name is Chris, Professor Chris, if you've seen the videos. Co-founder, head coach, VP of Happy here at Beacon DeFi. Today we have quite a few guests on the panel, as you can see. We're waiting for Braps to head back, but we do have Robert Arthur Williams, man of Web3, feeling better. Good to see you, sir. Hire this man, as you know, as the joke. Actually, let me.
Thanks for the shout out.
Of course, brother. Good to see that you're feeling better. There's Braps. We have Braps coming back. We also have Max, both from Filament. Feel free to say a quick hello, gentlemen.
Happy to join you all, and looking forward to the call.
Excellent. So we have a little bit of things to talk about. We actually have, let's go ahead and start really quick with a quick look at the market. We're looking at BTC making a big push. We're getting interesting inflows to ETFs. The US elections are next week. We'll talk a little bit more about that, in our first set of stories, but I just wanted to say that by this time next week, be a very interesting time in the United States, as we are going to have our elections next Tuesday. It's going to be a wild ride, regardless of where you stand on the political spectrum. Ultimately, if you're an American citizen, do your civic duty and vote. Simple as that. Or if you've been voting your butt off on Polymarket or any other prediction market, do your part too. My goodness, there's less than 1% of all kinds of people being voted on here. Interesting. But yeah, by this time next Tuesday, we should have a little bit of a clear path on where we're going to be going in terms of crypto, in terms of DeFi. Looking at bubbles for the day, we're looking at a little bit of red, but overall, for the week from last week, we've got quite a bit of movement, obviously. Higher highs means more bidding. And overall, we're looking at a very healthy bunch of alts and meme coins to definitely go after. So something to definitely, look at, moving forward. Did want to go ahead and bring up our group, Total Value Locked. Again, this is our free group from here at Beacon DeFi. We are now up to 989 members, guys. I think that's like 50 more than what we had 2 weeks ago. We are on our way to 1,000 active members, starting from our launch of our free group here back in mid-February, right before ETH Denver. So in the event that you'd like to, you have any friends who are curious about DeFi, looking to get into DeFi, want to know more, want to learn from the best in the business, and do it absolutely free, join us here, school.com/beacon. I did want to also highlight, just go ahead and check out our Start Here post and check out our Introduction to DeFi module. I'm definitely looking for some really good feedback specifically on this. Starting on the knowledge path, everything we talk about here, having an all-weather portfolio, our 40-40-20 system, stable coins being the killer app of crypto, looking at concentrated liquidity perp dexes in our 2024 trends. Check it out. This is the path to get started. Learn it for absolutely free. Sorry, I can't talk today. At school.com/beacon. All right, we're going to try and speed through the news a little bit because we have a lot to talk about with our guest today from Filament. Definitely check them out before we get there if you want to at their website. The website's over here, filament.zone. Check them out. We'll go ahead and start with the news, though, starting with, again, the BTC market is starting to catch a little bit of fire. We have record inflows coming in for the ETFs, nearly $1 billion inflows over the past week, as we're getting very close to the all-time high with 73,454, I think is what the high is. And we are well above, the 69 where we were looking up at last week. Florida State CFO, Mr. Balchunas, has included Bitcoin as a proposal for pension funds, calling BTC digital gold. This is Jimmy Patronis, the CFO of the state of Florida. Ultimately, they have multiple things that their pension funds go into. I want to say there's like $250 billion assets under management, 205, sorry. And they manage multiple dozens of funds, more than 30. So It would just be a little bit of an interesting buy into there. Also, along with that, we learned last week that Emory University, one of the elite universities of the American South, has roughly 16 million worth of Bitcoin in an endowment that they bought in one of the ETFs. So definitely movement here, moving forward. How much movement after the election? Kind of hard to say. Just wanted to get quick thoughts from you, Robert, from you, Max, on specifically on how you think the market's going to be playing out over the next week, based off of this movement. Let's start with you, Max.
Okay, go ahead.
Sorry, could you repeat it? My internet was bugging a bit.
No, that's okay. Just with all of the movement here with BTC, and the elections coming up, are you seeing with all these inflows some more bullish, bullish entries into the market? Is in based where you are in the world? There are a lot of people talking about Bitcoin starting to go up and to the right.
Well, I mean, I think most of my crypto environment people are very geographically agnostic. So they're spread across the world. So it doesn't really matter where I am. I mean, in Germany, people are talking about the election too. Well, I think it's very filtered here. There's not like, raw underground coverage from the US. I think personally, I'm positioning more long towards the election. I think regardless the outcome in the mid to long term, both candidates are fiscally rather irresponsible. There'll probably be a lot of spending, a lot of dilution, which is in turn bullish for Bitcoin. I think if Trump wins, there might be more expectations of Gary Gensler being replaced quickly and a more friendly regulatory stance towards certain altcoins. So maybe if you wanted to set up a pair trade, you could if you want to bet on Trump, you could long alts versus BTC, even though the higher bullishness for alts might be the consequence, I don't know if the market will perceive that in case of a Trump win. In case of a Kamala win, I think there could be a little uncertainty at the beginning and a little sell-off, but in the mid to long term, I think I'm personally still very bullish on the markets.
Excellent. What about you, Robert? How are you feeling about the way the market's moving right now?
Yeah, I kind of echo a lot of those thoughts that Max gave. I do think that there's a higher likelihood of friendlier altcoin regulation if Trump is elected. I think it'll still be kind of up in the air or in question in terms of who Kamala installs as SEC head and so forth, and what kind of regulation she tries to get through Congress. I think especially towards altcoins, it'll be a bit harsher if Kamala is elected.
How about you, Braps? Any thoughts on what we're looking at the markets this week based on the ETF inflows, the elections happening? I know that Braps isn't technically in transit, so maybe there's a little bit of lag on his side, but. And actually, you're muted right now, sir. So there you go.
No, my overall macro is bullish. I think that Trump is going to lock it in. I think all the polls are pointing in that direction. I think there would have to be a very heavy bias, even for the populist numbers that are coming out for Kamala to take it away. And I think the market is responding very positively to the idea of a short-term Trump win. However, I also think that it's going to be short-term inflationary. I mean, both candidates are going to be inflationary, which means that there's going to be some hell to pay in terms of interest rates and balance books at some point. But in the midterm, I think that it's overall bullish for the crypto macro.
Excellent. Well, thank you for that. We'll go ahead and move on to our next topic. Ultimately, right now we've seen a couple of big things launch over the last week, and the biggest one, at least in my opinion, is actually about a new set of virtual AI agents that have kind of hit the floor and got started running. Specifically with Virtual's protocol, which is on Base blockchain. They have autonomous AI agents. The first one specifically was called Luna, and it caused a big stir, specifically because we have a lot of interesting movements on what these agents are going to be doing. There's a lot of interesting use cases. A couple others that are out there is Ethernet, which is from Higher Collective on Higher Tools. It's and again, this is on Farcaster off of the Higher Network Participant. Again, I think they're doing specifically with, I think it's just trading at this point for Ethernet. But they're using Farcaster as a way to leverage just participation and things like that, purchasing tokens to essentially co-own some of this stuff. Virtual specifically has what's called a generative autonomous multimodal entity, or a G.A.M.A framework with part of their stack. And this, of course, comes off of Truth Terminal and stuff like Goat and Genon. Any thoughts, guys, on what you think would be the specific, I guess, biggest trend that you could see coming with this intersection of crypto and AI now starting to make its move into things like trading partners and stuff like that? Robert, I'll start with you on this one.
Well, in terms of utilizing agents to make them like your make them like a trading partner, I think it's gonna really change the whole calculus of trading, honestly, because obviously AI agents can trade 10x better than the average person, and if not every person, but there'll be like a curve, right? So like there'll be like the first adopters who are adopting these agents, and they'll have an advantage. But eventually, it'll kind of metabolize through the whole market, and so maybe not this cycle, but maybe in a few years, pretty much everybody will be using these agents, and it'll be interesting to see like how they compete against each other, basically, at that point.
Yeah, because this is different than like a bonk bot or a banana terminal or something like this, right? This is something that that can specifically take parameters and continuously get better. So Braps, I definitely, if you have a second to kind of chime in on this one to get your opinion, then we'll go to Max after that. But what do you think about this release of AI agents?
I think what we're seeing really is like the first vintage of on-chain actors, automated on-chain actors that are being branded as AI agents, but it's not the first generation of automated on-chain actors. We know from the MEV space that a majority of the volume is from automated actors. We've seen that on-chain markets have been greatly dominated and even shaped by automation, like a few people deploying capital towards these ends. I think what's really changing is that we're offering some of these market actions to consumers. We're trying to commercialize just the on-chain activation of automated activity through agents. So I suspect that the first ones are not going to be great. I think that there's going to be an evolution, but all roads point to consumers having more flexibility, purchasing power, more ability to sort of aggregate diverse data sources and automate on-chain activity in a way that is ideally incentive compatible with their needs versus how it's been in the past, where you're kind of competing with more informed actors. So agents really can present like a new opportunity for consumers to participate in on-chain markets in a competitive way.
How about you, Max? What are your thoughts on this?
Yeah, I agree with many of the things previously said. I think they will do a great service to commoditizing information access and information digestion. But I still think as long as they're not fully automated in the pursuit of whatever economic objective given to them, it's not going to be like retail is going to trade on par with more sophisticated actors like liquid funds. I still think that the irrationality, or what is being described as such we see in the markets right now, it will not fade away. I'm personally a big proponent of financial absurdism. It is somewhat similar to financial nihilism that I think Travis Kling from Ikigai Fund has written some articles about, which I'd highly recommend reading. I don't think it's as bad as nihilism, but it's definitely coming close to absurdism. So I think the kind of exaggerations we see in the market right now, I don't think that will disappear just because AI agents will enter the game. under the disguise of being that sort of rational actor. And on the other hand, I definitely think that some of the more dry and dire tasks of transaction conduction, like setting up wallets, managing funds, rebalancing portfolios, some accounting stuff, if these AI agents get integrated into some other applications, I think that could take away a lot of the UX problems that we still have in the space right now. And yeah, that could do a good service to onboarding more users or engaging the ones we have right now in a deeper manner.
No, that's great. I completely agree with that. One thing I definitely wanted to bring up, I posted the link here in the chat. This is from Bankless. They actually, I think David, no, or rather Ryan, was on. They have a video, I think, like where they help you set up one of these agents in under 3 minutes with no code. I think that's kind of the other part that's really interesting about this, is that there's been a lot of movement very quickly into making it so that no code or just purchasing, the right tools will get you one of these very quickly. I think what you mentioned, Max, was really interesting about the idea of having it be a bit more interoperable, where you can actually have apps plug and play, at least on the virtual side, to do more things. One thing I definitely wanted to bring up was, and let me bring up Lincoln, who is if I'm not mistaken, this is the guy who created the Coinbase Smart Wallet back in February during ETH Denver. This was so they have what are called based agents now at Coinbase. So as long as you have an SDK key from Coinbase, an OpenAI key, and access to Replit, you can actually deploy one of the agents here that they've created on the base side in less than 3 minutes, which is a bit nuts, to be quite honest with you. You could spin one of these up faster than it takes to, bridge funds over to Solana through Wormhole, which I think is always a good measuring stick to have at this point. Although that's really not that big of a goal. I did actually want to bring up, and I'll put this in the show notes specifically. Coinbase has a really interesting article about demystifying the crypto and AI stack, along with a really large image here of what the current stack looks like. This is based on their vantage point, of course, and they do have some of their Coinbase venture companies in here. So what's interesting about this is just specifically how large this space has gotten in a very short amount of time. We keep seeing the word interfaces, the word agents. There's going to be a lot of tools for anybody who, if you're new into DeFi, a lot of this just may be overwhelming. But for those of us who have been here, who have been looking for iterations on DeFi, specifically since 2019, in my case, we're going from, looking at some very, very niche and very clunky interfaces into things that are very fast, training on LLMs, things that are going to continue. Wow, I'm seeing a lot of interesting names that I've already talked to here on, what's going to be moving forward. So looking at the, I wouldn't even say looking at the compute side, looking at the application side, I do think that this is going to grow very quickly. Actually, I think before the end of the year. So, with everything that's going on, we're going to have our newest partner, Arexa, an AI trading platform with predictive analytics. We'll have them on next Wednesday to talk a little bit more about this as well. But I just want to get any closing thoughts from you guys about looking at this map of, what's out here. It's hard to not be bullish on this sector. Would you say so, Braps?
So every time we see one of these diagrams, there's a lot of overlap. Whenever we see like the L2 landscape or even crypto, this is just an ontology that is sort of categorizing existing products that may have varying degrees of relationships or adoption with consumers that is being framed in this new AI landscape, just because AI is such an exciting space. That said, I think that a lot of these are very new, and you're seeing sizable communities emerging. Clearly, BitTensor is like a serious community. It has multiple subnets operating with various tasks, like dispensing serious emissions to incentivize an open community of AI researchers to contribute resources to this joint platform. But there's also others. So like it's huge versus, let's say, Ocean Protocol has been around since 2019. It's had the vision, right, to sort of anticipate that most on-chain actors are going to be AI informed or agents themselves. It's absolutely insane the acceleration that we're seeing, and I think it's like one of the most exciting parts in crypto because the cement is not yet dry. It isn't clear how a lot of these new products are going to fit into a larger um, consumer landscape. It's possible that there's top of a lot of these products that are going to be part of the supply chain, but maybe not be consumer facing, but they may be incredibly valuable. So it's a super exciting time for the crypto XAI stack.
Yeah, completely agree. What about you, Max? What are your thoughts on this?
I think another important thing to note is that over the past days, when I talked to other people or read some threads about it or watched some videos on it, it's for many people, especially in the DeFi space, which is rather surprising because many of the DeFi people, when it comes to asset allocation and directional trades, they're very mid-curve and they're very disinterested in like the, far left curve or far right curve innovation things. And many of these people are very excited about the whole AI agent space. Another thing that could get an internal flywheel started is that before, for something like Akash or many of the compute and decentralized AI-powered sort of deepen projects, they've always been able to bootstrap supply fairly well of compute resources, but there hasn't been consistent demand driver. And if there's a lot of on-chain activity coming from these AI agents now, that demand driver might emerge internally from our own industry. And instead of we bringing crypto to AI now comes to us into crypto, which I think is a pretty cool development. We should definitely keep an eye on. And yeah, I mean, there's lots of interesting stuff that will happen. I think also that more and more of these agents will be able to launch their own coins, launch their own cults around it. I think the cult building and like memetics in a more philosophical sense space is pretty interesting to observe. To what extent these agents will compete with each other, and what role human creation and human action on chain will take down the road.
Excellent points. Your thoughts, Robert?
Those are all great points. I think just like any other sector, a lot of what's mapped out here is going to depend on which chains over the next 3 to 5 years or even longer kind of emerge as winners, so to speak. And it'll be interesting to see, as Max kind of alluded to, like maybe perhaps even the kind of feedback that AI, or like let's say the opinion that AI agents have on which chains they prefer. I mean, in terms of throughput, decentralization, uptime, and overall integrity of the chain. We might actually start hearing from agents directly on what's the most optimal chain for them, and that might really contribute to the growth of a particular chain or ecosystem. I mean, some of these things, some of these items here or projects here are chain agnostic or multi-chain, but I think there will be some sort of feedback actually coming from the agents in terms of performance and optimization there.
Yeah, I completely agree. And one thing that Susan brought up is the AI agent being another time saver. In our group specifically, we have a lot of people who are business owners. They spend maybe an hour a week tops on looking at DeFi, and having some sort of set and forget reliable partner that you can have to manage any positions that you have, or just investing in something kind of like Hyperliquid in their community vault or other types of LPs like that. Having it being now AI powered could be something that brings a lot of new people into the space. So curious to see where this goes from here. Obviously the map that I showed you is very large, and there's a lot of different things that we could talk about there in terms of just what their tech is. But the point is, this fabric is growing, it's getting more robust, It's getting thicker, and it's here to stay. Specifically, one thing I can definitely see at the nature of all this is that a lot of this is very much around decentralized AI. So BitTensor and other types of technologies adjacent to that, I think, are going to be definitely affected. Last thing we'll talk about before we start talking about Filament is there's a new L2 in town, ladies and gentlemen, and that is Ink from Kraken. Met Kraken at Permissionless in Salt Lake City 3 weeks ago now. Had a great conversation with them. This is something that they have as part of their labs department. This is built on top of the Optimism L2 stack, which I think is interesting. Another interesting part is, in terms of, so they mentioned they were already on Bankless. So they said the main reason why they came over there was the fact that they could easily spin up, an instance of the blockchain and just get to start using Ethereum right away was a big gainer for them in terms of what they were looking to do. It also, helps that the OP Foundation gave them a grant of 25 million OP tokens, but that's neither here nor there. So we'll see exactly, where we go from here. But they actually haven't made it to mainnet. They're still just putting everything out. Looks like they may be launching around DevCon in Thailand in 2 weeks. So we'll see what happens there. But their run up time was very short in terms of getting all of this together. What I will say is, and I'll put this in the chat, if you are interested in getting a commemorative NFT, which could be helpful if you're looking for specifically, maybe possibly for airdrop status, I'll put it here in the chat. There is an NFT you can collect on Zora, and it gets you an OG role in the Discord. So go to Inkonchain.com if you're curious about Kraken Layer 2 and using it. They're going to be, testnet's live in 11 days. So there we go. But they're looking to take a lot of what their CEX experience is and bring it to DeFi. That was kind of what they mentioned. So anybody who's curious about the Ink theming, since they are a Kraken, a cephalopod like an octopus, forging, moving forward with Ink, kind of made sense. So I thought it was a really clever tie into that. So wanted to go ahead and get anybody's opinion on again, another competitor coming in. Obviously we had Uniswap with Unichain, we had DBank with DBank Chain. Now we have Kraken with Ink on chain coming forward. Max, we'll start with you on this. Any thoughts on Ink coming into the ecosystem here?
Yeah, I think the initial thought that everybody will raise is, do we need another L2? We probably do not. Still, it's probably a plus EV move for every large centralized exchange to launch their own chain. Binance has their Binance Smart Chain. They can funnel some activity through that. Coinbase has Base. And if, as a centralized exchange, you are also following the thesis that over time, more and more activity will move on chain, having a proprietary chain is the absolute right thing to do and inevitable for those who want to sustain their market share. I think it's also another proof that Optimism is doing really well in terms of business development. It's quite impressive that pretty much all new L2s that have a centralized and institutional touch point are usually built on the OP stack. Will that have implications for the OP token? I'm not sure about it. I mean, it's not having a lot of monetary premium as something like ETH has, which is being used as the gas token across these L2s. So yeah, it would not be a major shift in my perception towards, okay, do I want to have an OP allocation or not, which I personally do not have much of, and I don't plan to build that out because it still fails to capture the monetary premium. In terms of a future Ink airdrop, I think it's just as much uncertain as it is with a base airdrop. Very dependent on the regulatory developments in the US. Under the current regime, I would not expect an airdrop either for base nor for Ink. However, if the regulators position themselves more friendly towards crypto, I think that's definitely an option down the road. It's also going to be interesting to see how that ties in. For example, if we had a base token with the coin stock and if we had an Ink token with Kraken's equity if they plan to IPO down the road, and what the dynamic between the stock and the token would be. Because of course a token would not give you ownership rights of the company, but since these two projects, Ink and Kraken and Coinbase and Base, would be heavily intertwined, there would be, at least in the valuation from the market side, probably a lot of questions raised around that.
What about you, Robert? Your thoughts, sir?
Yeah, I think Max just covered a lot and gave a really great and complete answer. Yeah, I think in terms of, because I mean, Kraken and obviously Coinbase have been targeted by the SEC, and so I think in some ways these L2s are kind of a hedge against some of those regulatory attacks. What I'm curious about is how launching these L2s is actually going to generate more revenue for these companies in the face of regulatory tightening. How that'll actually play out depending on how things shake out in the regulatory sphere. And I'm also curious to see, besides airdrop hunting, like who actually would use, the Kraken L2. I think there'll be like a lot of airdrop hunters, obviously some native Kraken users, which are obviously much smaller than the Coinbase set of users. But yeah, I mean, given the landscape and with so many L2s competing in the space, I see the need for it, like Max said, to survive and not become a total dinosaur in the space as a SEX, central exchange. But yeah, I don't really see the use for it in general. So
Honestly, I think they're following the pattern, right? Because we are overall as a community, we are bullish for these SEX L2s. Obviously, Base is something we're very bullish on. Mantle from Bybit, something else we're also bullish on. And seeing more of the CEXs come down as more of these perp dexes are taking TVL away from SEXs overall, this might be the move for them to at least bring their experience down into DeFi. Because if there's one thing that Kraken is pretty decent at, it's at onboarding users, especially businesses. So this could be a really interesting way to bring more businesses down into DeFi, trying to replicate that experience. So perhaps wanted to end with you on your thoughts on having, another L2, but this time from a pretty interesting, at least US-based SEX.
So I think it's inevitable that every centralized exchange is going to launch an L2 because they've already done the hard work of acquiring the most difficult thing in crypto, which is users. And what every product going to market is really struggling with is distribution. So there are many OP stacks or equivalent ways to launch a chain. Why would you choose any particular one? There's many ways to launch a protocol. There's infinite amounts of block space on varied smart contract platforms. We can go. How do you choose? Well, the choice that a lot of protocols are choosing is to go where the users are, which is pretty smart. And centralized exchanges have those large user bases that they could offer to protocols launching within their sort of protocol or a platform umbrella, that is usually supported by an L2. So if you're an NFT or a meme coin or whatever, you don't want to launch just anywhere. You want to go a specific place where there's a set of tools and specifically, retail users, and exchanges have that. So it totally makes sense for Kraken to sort of provide a platform to add value to their existing users in a decentralized world. There's a lot of things for regulatory reason that they're never going to offer directly, but they could still benefit from by providing as a service within their sort of platform umbrella through their L2. So I think it's pretty an obvious move. I don't think there are many exchange. OKX has a chain. Binance has a chain. Crypto.com has a chain. I don't see how any large exchange would not come to the inevitable conclusion that launching a chain is essentially a leverage position on their existing users.
Completely agree. Before we move on to our What We Learned section with our featured guest here at Filament, definitely just take a minute, please, to, if you're on Twitter, please retweet and like the stream. If you're on our YouTube channel, please like, subscribe. If you like what you're hearing, we're here with the best people in Web3 every single week, talking about the week's best news and educating you, our faithful users, on how you too can find success here in the decentralized finance space. All right, let's go and move on to Filament, our featured guest here today. again, thanks for being here with us, guys. We're really excited to talk to you and find out more, specifically about how Filament works, and what to look forward to. And it's a very timely topic to talk about airdrops. So definitely wanted to hear from either you or from you, Braps, Max or Braps, sorry, about what Filament is and its basic mission.
So Filament really came out of the efforts of a larger sort of Mechatech project. So the Mechatech project was myself and actually a co-founder. Both of us worked in Cosmos for a long time, which is probably one of the larger ICOs that finance a lot of core infrastructure, including IBC, Tendermint, and like the sovereign app chain thesis, where before Cosmos, there was, not the L2 explosion that we have now, but there was a fixed amount of chains that were missing sort of tooling to launch sovereign communities. And with sovereign communities came like sovereign money, where we found a way for local communities to launch tokens and ideally use that to finance development of the project and provide exposure to community members to the upside of participating in that community. I think airdrops were obviously a major component of that, where they became, post 2017, a liquidity formation event with the idea that if you can seed the community with liquidity, you kind of bootstrap price discovery of whatever it is you're producing. If you have a token that is associated with a product, you could allow the open market to sort of price confidence in that product, and you could use that to finance a project. That was the idea. Obviously, since then, the incentives for and the meta of launching a token have changed. And there's been huge airdrops even this year. I think there was over 4 billion in airdrops up to date in 24, including Wormhole and Eigenlayer with these huge events, and they all kind of have varying degrees of success. But I would say the meta right now is quite negative on airdrops. This idea that giving tokens to people who don't want them is actually not helpful in forming a durable community. So even though the intention and the essential role of tokens is allowing community to have like a local money or a local price of productivity is a good thing, there hasn't really been the tools to effectively program monetary policy. It's actually very difficult to launch a token. If you've had like, a 4-year or 5-year development cycle of some advanced piece of technology, some other software, you might not be experts in tokenomics. And despite all the good effort that you may do in innovating in technology, in the end, you will be judged by the.
I think we're kind of losing perhaps on the. There we go. Looks like you're frozen there for a second, but go ahead and move on to the next question, which is, you'd already talked about how Filament got started. What do you think is the main problems that Filament will be solving with this platform?
So just to jump back in, sorry, I got disconnected by a tunnel, but
No,
Filament is producing like a new set of primitives to allow to program monetary policy to make airdrops work. I think it's very plain to see that airdrops really struggle, that the tools that protocol developers and communities have are quite rudimentary, and that if we are to have communities form around local versions of productivity represented as tokens, we need to have better tools, and Filament is that solution.
Wonderful. I really like that. Robert, do you have any questions for Filament while I load up a note that I wanted to reference real quick?
Yeah, sure. Like perhaps I was just curious, like what tools specifically can you like go into a little more detail on those tools and how they will kind of create a different experience for airdrops in general?
So there's 3 things that Filament provides. Number 1 is providing the incentives to bring better on-chain data and verifiability of criteria. So imagine like defining, okay, I would like to incentivize LPs in specific pools, but how do I know who the LP was in that pool at the time? How do I have credible data that I could actually allocate a significant amount of capital, or configure a monetary policy with confidence and know that I am paying the right people, that I'm not going to be just farmed. Number two, coming to consensus over the criteria. So we provide a facility for community members to actually vote on what should be incentivized. And then we, in turn, provide a feedback loop to ensure that if you have a specific outcome in mind, for instance, you want to generate TVL, or you want to have your 30-day active addresses go up or something like that, that the people that actually vote on the criteria that produce that result are rewarded. And number three, we provide new primitives for emissions that are actually programmatic. For instance, imagine an airdrop that has dynamic vesting with, for instance, a criteria like volume through a pool. So you could allocate a significant amount of your token supply to users, but have it locked, not based on arbitrary criteria like time, but instead based on something significant. For instance, we will release more tokens to the community so long as liquidity in the pool can sustain it, as in it doesn't affect the price. So if there's more volume and that it incurs less slippage, for instance, then we feel more confident sort of releasing more of the token supply. So it provides a new set of primitives, including consensus and new data to provide programmatic monetary policy. That's the idea.
Yeah, that's very cool, because when I was with Reserve for some time as their community manager, and yeah, that was some of the things we kind of touched upon were how to track these things, and a lot of it had to do with part of it had to do with building out Dune analytics dashboards to kind of complement some of the questing campaigns, but obviously that's a bit wonky, so it's like super useful to have this all in one place.
Yeah, and of course, like providing standardized toolings, I mean, you could have standardized information instead of, if you look, there's like hundreds of millions that are allocated through incentive programs like Arbitrum, what is short-term incentive program, or like ZK Sync just did 30 million in incentives for liquidity in different venues, and for all these projects, it's kind of a one-off opaque process, as in they have to develop, like the tooling of actually allocating that kind of capital is actually significant. It's not just a bash script with a for loop. You have to certify that you give the people the right time, and more importantly, as a process, you have to provide transparency to the community, as in, like, if we say we're going to spend money this way, how do we know that we actually spent the money the right way? With all this opaque tooling, it's very difficult for the community to have confidence in how they vote, and that makes all these governance processes so much more laborious, because you have to do all the work up front. You have to build all the conviction initially that these are the right people to do the right thing. And it's very hard that once the capital has been allocated, to hold the people that the capital was allocated to accountable, as in it's off the radar. It's like something in the rearview mirror, and then ask, okay, what happened to that 30 million? Like, who are the people that follow up on governance proposals after the capital has been allocated? Is very few people. And if that tooling was sort of like built in, you wouldn't have to, even if you had a good idea of how capital should be allocated, you wouldn't have to do such a lift to guarantee that you're going to do it the right way, because the tooling, the reporting, and the accountability can be built in.
No, I think that's great, because I think it's something we don't really have right now in a lot of campaigns, or at least campaigns we've been through. So I wanted to ask you really quick. So if you check on the publications site, you wrote a great article on Sybils, and I wanted to kind of ask you a little bit about this, specifically this diagram, specifically with Rough-Field Farmer's comment in the comments about the opportunity to become a delegator, which is what this area is right here. So if you could kind of maybe just describe for the audience, what this campaign, I guess, data flow kind of brings about. Is this a general solution, or is this a customized solution that Filament can provide? Just want to get a little bit more clarity on that.
So the Filament protocol has these roles where the campaigner is a role that allocates some budget. It doesn't necessarily have to be a protocol or a DAO. It could be any individual or collective that wants to instigate some kind of change within a protocol. You know, there's lots of people with tokens sitting on the sideline waiting to see growth. What do? Well, in this case, they could use Filament. They could allocate capital with some particular outcome that they want. Specifically, they say, like, if I'm an LRT, I really have to compete for prominence in a specific venue. I want liquidity, you know, on any kind of money market. My God, I'm struggling for words at the money market, Morpho, or any main money market that is going to have some kind of incentive. But then how do I choose the right venue? And how do I choose like the actual market clearing price for incentives? Like how much incentives do I have to pay to acquire $1 of liquidity in a specific venue? It's totally different on Aave than it is on Morpho. But how do I know how much that is? Well, you would outsource that function to a bunch of delegates. So delegates are a role of experts that are, you know exactly or have some kind of bet and some kind of incentive to choose the venues, right, where incentives should flow. And they say, like, for instance, I bet that Morpho is more valuable than Aave, as in I should allocate more incentives to that particular venue because I believe like the amount of dilution that I'll suffer will be less than if I had spent like just flooded another venue with a bunch of incentives. But how do you know? How do you know? Well, you could set a particular objective, which is economically robust. For instance, not TVLs, because TVL is very easy to come in and move out. But for instance, trading fees through particular pools is very hard to fake because you have to pay, you incur some economic cost of affecting that particular metric. So the way Filament works is you have a campaigner who allocates, you know, some budget with a particular intention. You want to generate some particular metric, like trading volume through a particular pool. You have a bunch of delegates who vote on how that capital should be allocated, as in which venues should be allocated with which degree. And then you actually see the outcome. So you actually measure after the fact, you know, which users. So if I incentivize these pools with these users, you actually measure what is the effect, not just in general, but of my vote. So if I like say you should put all your money in an Aave, but that generates zero trading fees, I will do less as a delegate than a delegate that says actually Morpho is a more capital efficient venue to direct incentives to. So what the Filament protocol does is sort of coordinate these actors to sort of make their bets and then measure the actual outcome and then apply sort of incentives to make sure the right behavior is rewarded. So delegates are, you know, staked actors, and they would come in. They also have people who stake to them. Those people are yield seeking, and they are trying to stake to the person who gets it right the most often, because obviously their yield and their commission is going to be based on how effective the delegates are at actually predicting how incentives should be allocated. So this diagram, which, you know, looks like a quantum fluxer, it's quite complicated, is just trying to really represent this feedback loop of allocating a budget, setting a criteria, adjusting it based on votes, and then rewarding the people based on how well they produce some objective measure.
Do you have any penalty program for bad delegates? That would be the only. That's the one part I'm curious about, because in a way the delegates are, voting on the aggregated criteria here. So, do you have what would be the equivalent of like a slashing type of incentive, or to keep people honest?
Well, what
So we have
campaigner
slashing
can do?
for inactivity.
Go ahead, John.
Sorry, there's just delegates are more rewarded positively for getting it right. So really what we want is like a market for intelligence, that because your yield on your stake position is going to be higher based on your performance, and we could do some smoothing function to make it more fair. But in general, what it's trying to say is that voting, like delegating to the smartest delegator, where the delegators vote in the interest of the campaign, that they do the hard work of determining actually the most productive venues are for allocating incentives, it's positive EV. It's you maximize your EV by voting on the objectives of the campaigner. So it's not really about punishment. It's really just about value seeking, in the same way that a farmer would be value seeking. The only punishment that we have is specifically for liveness constraints. So like if you're a delegator and you don't vote, You miss a vote, you don't participate, you're committed to voting, but you don't, then you get slashed.
Mm. No, I like the system. I was just curious, just in terms of like trying to keep, people incentivized to do the right thing, just making sure that, any bad actors who want to try and game the system can't do that.
Well,
That's
really, it's
interesting.
like the punishment is that if you do a shit job, then you're going to lose your delegation.
Fair.
You have to assume that stakers are value seeking, and they will go somewhere where the yields are higher.
Is there a cost to be a delegator?
Well,
No. I mean, there's going to. Go ahead, Max.
Sure. So as a delegate, it's an application-based program. There will be, at a future point in time, the opportunity to become a delegate in a more permissionless manner, but there's no cost associated to it. So for the initial set, we will bootstrap them with a foundation allocation, with a treasury allocation of FILA tokens. And for a delegator, so the people who delegate to the delegates, it's just people who hold FILA tokens who can delegate or stake their tokens to the delegates of their favor. And yeah, under the assumption that they are yield maximizing, you have the economic incentive for the delegates to act in a constructive and positive manner. And also, a campaigner does have the option to evict certain delegates they do not want to have as part of their campaign. But that is associated with a fee for the campaigner for that to not get abused.
No, that's cool. I like the idea of, possibly becoming like, making it a bit of a business model out of being a good delegator, right? If you can, if you have some type of reputation system, you're like, choose this delegate or reach out to this delegate because he has a good track record of doing his duty, to the letter. Kind of like, when you see a marketplace and, certain market, participants have a specific reputation score, like 100% or pardon me, like a star system, stuff like that. I think there's a really compelling case to be a delegate here or to, build goodwill, I guess would be the better way to describe it as, being a good delegate in the system. I'm really actually very intrigued by that. So.
Yeah, I mean, what it all comes down to at the end of the day is just economic incentive alignment and maybe ideological incentive alignment too. So for the ideological alignment, what you already hinted to, like building goodwill, I mean, down the road, if you're a campaigner that launches a campaign and there are some delegates that interact with you in a very constructive manner, help advise you in a way on a very crucial step, like launching your token, you might also want to have them on board as an advisor down the road. So there's like a lot of second and third order consequences for a good delegate that they can profit off if they engage and if they behave in a very constructive manner. And I mean, the issue that you have in the current airdrop meta is that projects do not face a direct economic cost of launching a token. I mean, you can do that without any upfront costs, and that way you're not really incentivized, or you're not punished or not punished strong enough if you allocate them in an inefficient manner. And we bring a balance back to that economic system where everybody involved, neither like both the campaigner, the delegates, and the delegators, they all bear the economic costs and the consequences of their decisions. And I think our approach is still very experimental, so we cannot predict the outcome, but I think that's the right approach to get to a better design of incentives as we currently have.
No, that's great. No, I think this is very intriguing. I'm so glad you guys are here to talk to us about this today. Braps, I know you have a little bit of a hard out, so just wanted to give you a quick second to plug anything you like about Filament. Any closing thoughts? Again, thanks so much for being here today with us.
No, I'm very grateful to come here and talk to the Beacon community, especially if there is this educational bias of trying to figure out how to make DeFi work and scale to more people. It's very excited to offer our set of primitives and get the community feedback on how you would like these kind of campaigns to be structured and what kind of behavior you think would be from delegates, and even to see if some of your community would be interested in becoming delegates. So I'm very grateful to be here. Thanks for having me.
Of course. Yeah, no, I think there are quite a few of us that would actually, love to volunteer and help test out the system. We're a very hungry community of people who want to know how DeFi works in a way that isn't some type of pump.fun or some kind of crazy meme coin thing. These are important things that people need to understand. This is why we believe that DeFi is the future of finance, the future of how we're going to be doing business, because mechanisms like these, they're really good. And these are things that we should explore, experiment with, find new ways to come to good outcomes. And I think this is a really fantastic way to go about it. So Brabs, thank you so much for being here with us today. I'll go ahead and ask this question for, you're welcome. I'm actually going to keep Max here for a second, just to kind of ask him, this last question specifically about airdrops. And, our community has been very fortunate where overall we've done very, very well with airdrops in the past, specifically with things like Jupiter, Arbitrum, ZK Sync, Celestia, and several others. There have been a lot of airdrops that have not quite gone to plan, I guess is probably the better word to use. What do you think, Max, should be the mindset of the everyday airdrop farmer moving forward?
I mean, unfortunately, just due to the nature of the space having become much more competitive and much more diluted with both Sybil's, so the number of wallets, but also the amount of capital that is flowing into. So expectations should be reduced unless you're able to figure out how to be early to a newly emerging ecosystem. I mean, all these super rewarding and very surprising airdrops by nature have not been anticipated by many. Think about something like Celestia. Think about where the snapshot date was lying, I think, a year back.
Yeah, it was really crazy.
So you had to be staking Atom at that point in time, where not many people had been precisely calculating, okay, at that point in time, in order to get that TIA token, which will do a 10x run-up, I now have to stake Atom. If more people would have known that, then probably more would have done it, and it would have not have been, making such waves. Similarly, with something like Jupiter. I mean, if everybody had known, okay, you just stake one Solana and you get a flat allocation. So all of these interaction-based airdrops, they need to, by nature, in order to function, they need to be unexpected. Otherwise, they'll just get diluted by the Sybil's. But on the other hand, these interaction-based ones are usually the more exciting airdrops that get referenced a lot because they led to these disproportionate rewards. Now with the capital-intensive ones, in order to make these work, you should still employ some criteria that help you to disproportionately reward smaller users without making it super easy for Sybil's. So again, try to figure out, okay, maybe relative to the total size of the wallet, how much capital did the user put into your protocol over what period of time? Because otherwise, if you have a clearly linear allocation, for example, as I think, Scroll was mostly linear, that led to very, dissatisfied community members, because all the small people who spend a bunch of, let's say a couple of dozen dollars on gas in the early days when a Scroll transaction was still $2, their Scroll tokens are now worth less than the entire money spent on gas, not even counting in the opportunity costs for their assets, where they could have used them elsewhere. So, I mean, what makes a good airdrop, you want to focus on the users who also have an interest of holding your token down the road. If you look at many of these more sophisticated farmer communities, they calculate their APR in dollars and they plan to sell 100% of your token as soon as it launches. You do not want to make it too easy to these people. And honestly, if you make them frustrated because you don't optimize your criteria for them, I mean, that's the way to go, because they don't create long-term systemic, economic value for your protocol. Similarly, it doesn't help you much to only optimize for small fish, even assuming if they're not Sybil's, because these people cannot bring capital and cannot bring a lot of economic value to you too. So you need to find a balance. You need to strike the balance between interaction-based stuff, where it is somewhat unexpected, maybe stuff that is more back in time that rewards people for actually being early. But then when it comes to capital-based stuff, you want to sort of find the balance between not making it too easy for Sybil's, but also not having a super high Gini coefficient. Because in the end, what keeps many people excited, both initially and down the road, to stay in crypto, is that opportunity, okay, I don't come from much, I don't have much, and here I can make it. And you need to preserve that opportunity for people, because if it's just maintaining or even increasing kind of the disparity of wealth allocation that we currently already have in the world, then many of these people who might be like early embracers and like bearers of the flag of crypto abandon it sooner rather than later, which I think is not a good strategy if we're still in a stage where we want to optimize for user growth.
Well, that's a great answer. Any thoughts, Robert?
Yeah, I mean, that all makes a lot of sense. I mean, I think in terms of like retaining users for the long term for any given project, it's, I mean, would you say, Max, it's like creating a system of perpetual incentives? I mean, it's like how far can these incentives be stretched out and like in a way that's viable, that benefits, even the smaller users?
Well, if it's you should not make it a perpetual incentive, because that will take away kind of the excitement around airdrops. Otherwise, it will just be, I mean, we see a convergence between one-time airdrop and like consistent incentives from last cycle and airdrops this cycle. So I think the Arbitrum long-term incentive program was a good example of that. It was still time limited, so not perpetual, but over that time, there were very regular incentives. But what you want to prevent is you do not want to rely on your token to incentivize any type of activity of your product. If that's the case, then your product is just bad. You want to use the token to bootstrap activity, bootstrap users, and bootstrap capital inflow, and create a one-time or at least like several times down the road reward for interacting with you and helping you grow and creating economic value in you. But you do not want to make yourself dependent on that, because I mean, otherwise, what's the like? Let's take that thought to its logical end. You'd need to have an infinite supply of token, which means you dilute your early users. And if it's something that is consistently given out, consistently being rewarded to people, what's the value of it? That would be very hard to find. And it would, I mean, of course, you'd kind of argue, okay, now we tie our tokens so closely together with our product. But yeah, I mean, if that's the case, if you're dependent on the token, then I mean, the product is unfortunately useless. And we need to bootstrap supply, but it has to be maintained by something different than continuous incentives.
Yeah, I mean, just to clarify, I mean, I didn't really mean literally perpetual, like constant. I just like for with optimism, for example, like or projects like that where they have multiple seasons, and maybe perhaps the criteria for season 2, season 3, season 4 is not determined. So Optimism had an airdrop for NFT creators, for example, and so I don't think anybody really anticipated that. It was just people who were, you could say organically, maybe speculating or like interested in the ecosystem, who were then rewarded later on. So, I mean, in terms of like having like multiple iterations or seasons.
Yeah, I think the way Optimism does it makes total sense in terms of incentive allocation. The problem there is you don't really have a use case for the token. I mean, what I alluded to earlier when we were discussing Inc. and the growth of the OP stack, I mean, they're doing great at expanding their tech, but it still doesn't grow the utility or the value proposition of their token. So the thing that we cannot really fix with Filament, where we are still reliant on the input of the campaigner, is, okay, when it comes to the use case of your token and the integration of your token into the product, we cannot fix that for you. Delegates cannot fix that for you, and users also can't fix that for you. But it's something that you have to bring to the table. What we can help with is, okay, we can help you find the match between people who are genuinely bringing economic value to you and who are also interested in like your vision and are aligning with your project. That's where we can help. That's an incentive problem. What is the use case of the token? That's a product problem. And that is still, unfortunately, very concentrated in the hands of the project. So that is something that they have to think about a priori. And I think there are good examples of tokens. I think Optimism is a good case of that. they're doing a decent job at incentive allocation, but a terrible job at token utility.
Makes sense, yeah.
Fair enough. We'll go ahead and end on this this question, Max. I just wanted to know, specifically with Filament, how they're going to be working. Is it a chain agnostic, like just a smart contract deployment, or will you have, actual blockchain based dApps on every chain that will handle all of this movement when you start with delegation and stuff like that?
So we have the Filament Hub, which is a rollup, just a regular ETH2, that where the voting takes place to make it as close to gas-free as possible. So we want to keep also the switching costs of redelegating to another delegate very low, because we want to have a very closely knit and almost synchronous feedback loop of, okay, that's the delegate behavior, that's how your delegators respond to that. If they do not agree with it, they will delegate away from you, and they should be able to do so with very low costs. The Fila token itself will be running on ETH-L1 and on Base. So for campaign initiation and some larger transactions, that's probably going to take place on ETH-L1. And also to just have it present there. ETH-L1 is still kind of the largest hub of capital and DeFi activity, where a lot of projects are on, where a lot of liquidity is on. But also with Base, we make it more accessible for users who don't want to put in a couple of $1,000s at the beginning, and we don't want to make them pay $50 in gas fees. But yeah, the structure is on the Filament Hub itself, where the voting takes place. So that's a roll-up. And in terms of what projects we are able to work with, we are able to do all EVM, and soon, hopefully, SVM, and also a little bit of Cosmos stuff. As Brabs mentioned, the OG origin of the underlying project of Filament is in the Cosmos ecosystem. So we're still working very closely with a lot of data providers in that ecosystem. So if you're Cosmos-based or in any of the aligned chains like Celestia, if you're a roll-up on there, or if you're any EVM project, it's pretty easy for us to work with you. Only thing that still has to be implemented down the road is all things SVM, and then maybe if these ecosystems are growing, also movement.
You could also consider doing like an AVS through EigenLayer with restaked, that type of stuff as an AVS. That could be an interesting AVS idea.
It could be. Right now it's very cost effective to just have our own rollup.
Agreed.
But yeah, down the road, definitely open to that option.
Yeah. That's awesome. Well, Max, I want to thank you for being here with us today. I want to make sure I'm respectful of everyone's time. I am going to roll through a couple of questions real quick as we do our little outro. Here we always have a section called Call for Help, where we take pre-selected questions that we find within people asking about what we do or in our community. And question number 1 is from Thomas. He said, "How is my investment secured? Is there a form of insurance that can be taken in DeFi?" The answer is yes. There are DeFi insurance protocols that are out there. Like if you are in a particular project that, has an issue and suddenly you need to make an insurance claim, that is available. There are multiple protocols through multiple different blockchains that offer that type of service. I personally have never used one. I don't really see a huge need for that currently, just based on the way that the insurance normally works. You still have to make sure that there actually is insurance money to be claimed. I guess there's that too. But that doesn't mean that there aren't groups like OpenCover and InsureAce that have been around for a while that aren't doing good work in this space to make it viable. Last question would be from Ellie. How much time would I have to spend to make money versus losing money? You can lose money in this space very quickly. You can also make money very quickly in this space. Ultimately, you have to put in the time to understand that. I think that's general for any type of investment strategy you're looking at. Remember, decentralized finance is a place where you invest money. It's not just like a click a button, win a house, even though we make that joke all the time. You actually need to understand how this fundamentally works, and you should know how it fundamentally works. I would think that, with you putting your money in here, you want to know how it works and understand how your money is moving through the system. So, come to our group, take the time to learn and get educated, because that's the one thing that we definitely want is to be educated specifically. So again, one last plug to join us at school.com/beacon. Again, thanks to the guys over at Filament. Thanks to you, Robert, for being here with us today as well. Hire that man. And
We'll be here again.
you know, anything you want to plug, Max, go ahead and plug. Feel free to do so at this time.
Yeah, it was great joining you all. Had a lot of fun on the call, and it was great also to discuss some general market banter and DeFi news. And yeah, I'll send you all the links about Filament and also my Telegram handles. If any of your community members or your team members are interested in becoming a delegate, just feel free to reach out to me. There will be an interview-like meeting just to get to know you and to hear a little bit of your opinions on like DeFi, how you would personally vote on certain things, how you would structure airdrops, just so we see that there's a genuine interest and like a devotion of mind share to the space. And but yeah, all like types of experience levels are welcome. It's more, okay, are people engaged and do people want to like shape these criteria rather than do you already have a track record of being involved in XYZ amount of airdrops? And you can also stay anonymously if you wish to do so. So it's not yeah, a doxed application. So yeah, then if all goes well, you might be able to already join us in a couple of weeks down the road when we launch, definitely before end of the year, and yeah, work on the edge of new airdrop distributions and incentive mechanisms.
I love it. I think I'm definitely gonna find a way to make time to become a delegate, because I think it's important to be a part of these mechanisms, especially with all of the new things coming out. Then yeah, I've seen a lot of stuff, and I believe in a lot of good stuff about DeFi. Robert, I didn't give you a chance to plug yourself. Please do so, sir.
Oh yeah, hey, thanks. Good to be here again. Thanks for having me on a regular basis, Chris. It's been a lot of fun all the time. So yeah, I've been in the space since 2017. So I've been working professionally in it since 2020, since DeFi summer. And so I was recently with Reserve. I've been with Centrifuge, Talisman before. And so, yeah, mostly just a community builder, content creator, et cetera, et cetera. So anybody out there looking for someone with a solid background like that, hit me up.
Love it. And if you guys know anybody we should have on the show, we've been doing this show in some form since December 2021. Please have them reach out to us. We'd love to have as many people as possible on this show on a weekly basis as we cover every Wednesday at 1 p.m. Eastern. Go and stick around, guys, for 1 second, but we'll say goodbye to the rest of the community. We will see you on our next call. Take care, everybody. Have a great day. 07, beacons up, banks down. We'll see you guys later. Have a great day.